Between right now and New Year's Eve, a handful of specific dates are going to move markets more than all the noise in between. Not rumors, not hot takes, events already locked onto the calendar, the kind that force the market to show its cards. Here they are, in order from July through December, and for each one, the single thing it actually puts to the test. Because a date on a calendar is only useful if you know what question it answers. This is a map, not a forecast. So let's walk the back half of 2026, one checkpoint at a time. July front-loads the year's biggest question: is the artificial intelligence build-out still accelerating? Mid-month, the world's largest contract chipmaker reports the cleanest early read on whether demand for AI hardware is still climbing. In the last full week, the megacap giants report almost back-to-back, the same companies pouring tens of billions into that build-out. So their capital spending plans matter as much as their profits. And the month closes with the Federal Reserve meeting on July 29th. The question that week is simple to state. Is the spending wave still growing? And is the Fed any closer to cutting rates? You don't need a prediction. You just need to watch what these three actually say. August is quieter on the calendar, but heavier in weight, because it holds the single most watched earnings report in the market. Late in the month, the dominant designer of AI chips reports, and by then the megacaps have already told you how much they plan to spend. So this is the supply side answering the demand side. Days later comes the Federal Reserve's annual symposium in Jackson Hole, the setting where the Fed has historically used a keynote to signal shifts in its thinking. Neither is a number you can forecast. Together, they test one thing: whether the AI spending story and the interest rate story are still pointing the same direction or starting to pull apart. September is where the calendar gets dense. The Federal Reserve meets again on September 16th. And this is one of the 4 meetings a year that comes with fresh projections, the closest thing the market gets to the Fed publishing its own forecast for rates. 2 days later, on September 18th, is quadruple witching, the day that stock options, index options, and futures all expire at once, which reliably spikes trading volume and can whip prices around for reasons that have nothing to do with any company's fundamentals. And the month closes out the third quarter, the line that sets up the next earnings season. One meeting for the signal, one expiry for the turbulence. October opens earnings season for the third quarter. Banks first, then the megacaps late in the month. This is the real-world scorecard against every assumption baked into prices over the summer. In the middle of it, the Federal Reserve meets again on October 28th. Then the calendar thins into November, where the story shifts to the holiday shopping read, the first hard data on whether the consumer is still spending. The test across these weeks is whether third quarter results actually justify the valuations the market has been carrying, or whether the gap between price and proof finally has to close. December closes the year with 2 dates that matter. The Federal Reserve holds its final meeting of the year on December 9th, the last word on rates before January. And on December 18th comes the year's last quadruple witching, layered on top of the usual year-end machinery. Index funds rebalancing their holdings, and investors selling their losers to book tax losses. That combination can push prices around in ways that have nothing to do with any company's actual health. So the final checkpoint of the year tests something subtle. How much of December's move is real information, and how much is just the calendar rearranging the furniture? So there's the map. From July's earnings gauntlet to December's year-end reshuffle. Notice what it is and what it isn't. Every one of these is a scheduled event, not a prediction. A checkpoint that tests a specific thesis, not a signal to buy or sell anything. The value isn't in guessing the outcomes. It's in knowing ahead of time which days are actually going to carry information and which are just noise. Mark the Fed meetings, the 2 witching days, and the big earnings reads. Then watch how the market answers and ignore almost everything in between. That is how you read a calendar instead of reacting to a feed. This is educational market structure, not investment advice. Do your own work before acting on anything.